Hi, I'm Mary Kopczynski, the CEO of Regulator. Welcome to this week's regulatory roundup. I am multitasking, planning to get my drive-through COVID test with kid in the back before we go to his dermatology appointment. This week, there were exactly 1,400 alerts from 248 unique U.S. regulators, and 333 had to do with coronavirus. The regulator of the week is the SEC, who announced exemptions from proxy rules for proxy voting. They will also be holding a roundtable in the fall to go over their feedback after reviewing the first round of Form CRS disclosures. The topic of the week is money and the control of money. This week marks the 10-year anniversary of Dodd-Frank. To commemorate it, the CFTC approved a final swap dealer capital rule, making the completion of CFTC's required rulemakings under Section 731 of Dodd-Frank. The FDIC and the SEC also adopted a final rule on the orderly liquidation of broker-dealers under Title II of Dodd-Frank, closing out their obligations as well. The OCC, Treasury, the Fed, and the FDIC made proposed changes to the call reports FFIEC 101 and 002 in response to COVID disruptions that revised the agency's capital rules. They are looking for feedback. The FDIC clarified the law that governs interest rates state-chartered banks and insured branches of foreign banks are allowed to charge. They can charge the rate permitted by the state or 1% more than the 90-day commercial paper rate, whichever is greater. The CFPB issued a final rule amending its regulations governing payday, vehicle title, and certain high-cost installment loans. And you guessed it, they deregulated, allowing lenders to do longer-term balloon payments again. They also got rid of the requirement that lenders determine if customers have the ability to pay before giving the loan. Also this week, the CFPB exempted the requirement for loan escrows for higher-priced mortgage loans. And in non-financial rules of controlling money, the White House issued 2 executive orders impacting the price of pharmaceutical drugs. The first allows more drug importation from overseas, and the second limits kickbacks to so-called middlemen in the industry. Okay. Test has been taken and we await the results. For those of you following AML KYC, SEC busted a broker-dealer this week for Reg SHO and for failing to adequately implement its AML policies to reasonably prevent risk. The nice thing about following such a large quantity of regulators is that you pick up things you wouldn't normally follow in straight finance. So, for example, this week the Department of State updated the public guidance for CISA, which is a 2017 sanctions law, to address growing threats to U.S. national security and foreign policy related to Russian energy. And at the state level, the Nebraska Department of Insurance, even though it doesn't require the filing of a fraud plan, provided guidance to insurance carriers who wish to strengthen their fraud controls. For those of you following cannabis, hemp, Mary Jane, or even vaping rules, the FDA issued draft guidance for clinical research related to cannabis and cannabis-derived compounds. Last week, Georgia passed a law addressing youth vaping. For those of you following environmental rules, the IRS is having a hearing on their proposed regulations about carbon credits for carbon oxide sequestration. Volkswagen got nailed this week by the FTC for pitching their cars as environmentally conscious when they were in fact cheating on the emissions tests. They were actually caught for this in 2016, and it just took this long to get the final settlement of, get this, $9.5 billion. New York AG filed yet another suit against the Trump administration, this time to challenge a rule that restricts the ability of states to issue their own clean water. Also in New York, Governor Cuomo announced that New York is seeking 4,000 megawatts of renewable capacity to combat climate change. It is the largest clean energy solicitation ever issued in the United States. The EPA got rid of a form that companies normally fill out when they want to avoid the community right to know rules. and companies will be able to get an exemption from trade secrets in a much more streamlined way. For those of you following crypto, last week was big news. The OCC published a letter clarifying how national banks and federal savings associations can provide cryptocurrency custody services. My hero, Hester Peirce, gave a speech about regulating crypto at the Blockchain Association Singapore conference. I love her speeches, and I'm watching carefully to see if the Trump administration nominates her again. Sometimes she's with them, sometimes she's against them, but it sounds like he nominated some others over the week. So this may be the end of watching my hero speak on behalf of the SEC, but I know she will do great things no matter what happens. And ta-da! I am COVID-free and, more importantly, baby-free, so I can deliver you the cybersecurity update. Big news in cybersecurity this week as the New York Department of Financial Services charged First American Title Insurance Company with cybersecurity violations, which is the first enforcement of its kind. First American is one of the largest title insurance companies in the world, and apparently they were not properly protecting customers' sensitive personal information, including bank account numbers, mortgage and tax records, social security numbers, transaction receipts, and driver's license images. The Commerce Department and the International Trade Administration is planning a fall mission to Peru, Chile, Uruguay, and an optional stop in Argentina for cybersecurity business development. We will see if that happens virtually or in person. The IRS created the new Enterprise Digitization and Case Management Office, which is focused on resolving tax issues in a simplified digital environment. The IRS has also been hosting virtual events all week regarding remote working for tax professionals to make sure they are protecting their client data while working remotely. This is because of a heightened state of alert with a lot of cyber criminals trying to exploit COVID-19. And finally, the Cybersecurity and Infrastructure Security Agency is having an open meeting of the President's National Security Telecommunications Advisory Committee on August 12th. In our Fine Tracker this week, the CFTC awarded one of the largest whistleblower awards in history at $9 million. The SEC busted a Silicon Valley machine learning startup for falsifying bank statements. The California Department of Insurance sentenced a con man to 12 years in prison for running a $7 million Ponzi scheme targeting seniors. The FTC busted a background check company for advertising with a teaser background check that insinuated people had a criminal history who did not. The New York AG convicted a Buffalo firearms instructor for falsifying a firearms safety training course. There's also a really big lawsuit going on from South Carolina. A traveler from there is challenging Hawaii's mandatory traveler quarantine, and so far the district court denied the traveler's request to lift the ban ahead of the lawsuit. For those of you following the LIBOR transition, ARC released guidance for when SOFR is in arrears, especially in syndicated loans. For those of you following social justice, I guess I should be happy that the FDIC nominated one female to the Systemic Resolution Advisory Board, but I'm sad to see that everyone is Caucasian, though it does include the former chairman of the Federal Reserve, Ben Bernanke. The North American Securities Administrators Association released a report examining issues related to diminished capacity and cognitive impairment that may affect finance professionals. Last week, Trump rolled back an Obama-era fair housing rule from HUD. He also ordered Census officials to exclude undocumented immigrants in their counts. New York is, of course, suing the Trump administration over it. And then, of course, there is the federal versus local police situation going on. Lots of state commentary on those topics, and a number of states who are still holding true to their plans to enact police reform. The Pennsylvania Department of Transportation is the first state ever to offer non-binary gender designation options to driver's licenses and ID cards. For those of you following SROs, NASDAQ is trying to propose a novel rule that adds certain restrictions on companies who want to list with the exchange if they come from a country that has really intense secrecy rules. For example, they have to show extra qualifications for their board members. The SEC is unsurprisingly taking a little bit longer to think about this rule change. In faster gratification, the SEC did pass NASDAQ's rule allowing deferment of entry fees for sponsors to list acquisition companies on NASDAQ. NASDAQ believed that a one-year deferment is going to allow it to be more competitive as an exchange, while allowing the companies to have a little bit more time to have adequate revenue to meet all of their regulatory responsibilities before listing. In state news, Pennsylvania is adding an extra $600 to unemployed Pennsylvanians when their federal benefits run out. In contrast, Michigan's Department of Insurance and Financial Services reminded consumers that COVID forbearance periods are ending and they need to resume timely payments. New Mexico's Life and Health Division is offering a special life insurance policy locator to help families of the deceased COVID victims figure out what's left. That's it this week for Regulator's US Alerts. Join us every Wednesday morning on LinkedIn, and for the longer version, see us on YouTube. Regulator's US Alerts is the #1 source of rules and announcements from every agency in the United States. Click to subscribe to our weekly roundup of US Alerts, follow us on LinkedIn, and visit us at www.regulatorx.ai.